Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, June 23rd, 2013. Quite a rout in the markets this week. This is the daily bar from Thursday here, obviously. I'm going to switch this over to a weekly so we can see what the selling looked like. Not completely, not an outsized down week, but decent. Probably more volatility to the downside than we've seen in some time. Clearly, the uptrend line in the S&P is now broken. As you can see here, I was talking about in last week's video that the touches here were becoming very closer than before, and it was very strange price action in that we, over the course of the weekend, that we actually broke trend to the upside, but the comments by Bernanke during the FOMC meeting on Wednesday at 2 p.m. just took the market much lower, and all of these buyers here were kind of caught with their pants down, and then we ended up breaking trend on Thursday. What's interesting about this market now in relation to how we've been trading before is there was a pretty strong pickup in overall volume in Thursday's action. These days here, moving up over the trend line, we're trading around 3 billion shares on the NYSE. This down day here traded 4.7 billion shares on the NYSE. So it's just something to keep in mind, the difference between whether the market is under accumulation or distribution. So clearly, I would have to say under in that point, the market is under distribution as it comes down on an increase in volume. So the big question, of course, now is where to from here. And before we get to that prediction, for lack of a better word, I want to just look at other majors. Notice that the Dow has completely fallen out of its channel as well, and I'm going to put these on the weekly here, and we can get rid of that. And the Nasdaq Composite has now also on the weekly moved down a bit. However, notice that the Nasdaq Composite is still well above its channel. So this is important because we have some majors that are above the channel and some that are below. And the Russell on the weekly is also not really pulling back all that much. So you can see how these things are kind of out of sync. So for this reason, I think that the move downward in the S&P is probably going to be about another 40 points lower. And I'm putting that target area for the coming week right in here around the 1555 area. Right in here. Actually, I'm going to put it around 1550, right about there. Notice that we spent an inordinate amount of time here, almost like pretty much 2 months worth of action. This is weekly, so you've got 4 weeks, 7 weeks, right in this area. So there's a lot of volume went off in the futures markets in this area, and there's a lot of perceived value in this area. So I would be thinking that this area here where a lot of volume traded is going to draw price like a magnet to it over the coming week, and we'll see. And then there should be some sort of a pause there, I would think. All right, let's take a look at the market profile if we can for a second here. And I'm going to move this so it's more in line here where you guys can see it. There we go. This is the Thursday action. This is the Friday action. Main things that I want to point out here is Friday's action was weak in that it failed to get into the upper distribution of Thursday's action. Thursday was a double distribution day. You have these two humps here. Treat each hump as if it was a separate day. Notice that the value on Friday mirrored this distribution here, not the upper distribution. There was a little bit of a foray up into this distribution, but it was more of rejection rather than acceptance. And the majority of the value was built in the lower area of Thursday's move in the lower distribution. The way you use this information is you carry it forward and you just think of it as, okay, Friday was a little bit of a bounce in the market. The S&P closed up 4. I think the Dow was up about 40. But really, it's more bearish action because value was actually lower. And where is the majority of the distribution? Here, where the prior day's range is. So that's why I would think that it is pretty much a little bit more bearish than bullish. As far as like poor highs, poor lows, and that sort of thing, let me just pull this down. We did have a tiny bit of excess on Friday, but it's not really any strong type of excess low, so I would think that we probably get a little bit of movement back. Also, the point of control is relatively prominent here at the 1585, so what I'll be watching for in early trade next week, meaning like Monday and Tuesday, I'll be looking to see where does trade develop in relation to this prominent point of control. If we start to develop trade above this point of control and more acceptance up here, then it puts the downward move somewhat in question. But if the value and starts to develop below this prominent point of control underneath the 1584, then I would say that it leaves the downward move more intact, and we would see a stronger possibility, as I was saying, that we would move to the 1550 over the course of next week. Okay, let's see here. Bonds. I had a long trade in bonds over on Friday. I wanted to discuss that. It was actually in bond futures, which are actually, it's in another account which I don't have open right here, so I'm just using this data feed. But you can clearly see that in the bond futures it was 135 in the ZB, and clearly the TLT, which tracks it, shows you that that was just lost. So I think that bonds are probably going to be a little bit weaker here. I was talking about the support level for a while in these videos, saying that I wanted to be a buyer there. I was a buyer at 135.02 in the bonds, and then got stopped out at 134.20 for about 22 ticks there in the bonds. So they did not hold support. Where to from now? I would say you have to look at the longer term time frame, and literally, I mean, it could even be this trend line here. We could see quite a rout in the bonds now, possibly moving lower to this 105 area. Okay, as far as leading stocks are concerned, I'm going to mention Apple here for probably the last time in a while that you're hearing me talk about Apple, because at this point there is nothing to talk about. I made a little bit of a buy on Thursday morning in the pre-market. Apple ran about 5 points from there and then just died, got stopped out break even, and Friday went lower. And that means that the inverted head and shoulders, which would mean this is your neckline here, this is the head, this is the right shoulder, or left shoulder, excuse me, this is the right shoulder. That neckline did not hold on the retest of the 420 area and actually closed well below it. That's about $6.50 closed below it, and Apple actually went as low as 408.10 in Friday's action. So pretty much dead money at this point. There's not a heck of a lot to talk about. Some of these other leading stocks that have been very strong, I think they still look okay, to be honest with you. And that's why I think that we do see a little bit of a tradable bounce at the 1550 area in the S&P. I mean, notice Google here still looks pretty good. Amazon came off a little but closed well off its lows in Friday's action. Priceline also holding well within its trading range, I would say, at this point. Notice that there's really kind of a trading range here on Priceline. It's really in the middle of it. So Priceline could, even if it was to come in another 25 points or so, would really only come into support here. Netflix, also same thing, kind of in the middle of the range. And that's about it. That's about it for the leading stocks that I want to discuss. Last but not least, I'm going to wrap it up with gold here. Gold had quite a rout on the break of the uptrend line. We talked about this for a while. I mentioned this in Tasty Trade and also in the Squawk Box show, which I've been hosting with Brad in the morning sessions all last week. I will continue to come on next week as well, so check us out under the Thinkorswim platform. You can find us there. I'll be co-hosting the morning session, but I've been saying that the break there was going to lead to further downside. I do still think that gold is going to be playable as an up move at some point, and it will be at the dominant trend line here, which is really right around 1100 actually. If you look at this here, it puts it at 1111 on the GLD. This tracks the gold futures on like a 1/10th basis. So I'm really looking at an 1100 support, and I think we could easily get there. If you notice, these are monthly bars. One more month of sliding, price action to the downside, I think would set that up, and then I think gold will probably be a pretty strong buy there at about 1100, but we've got a ways to go before that. All right, that's going to do it for this week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.